In exercise 2-5, we're going to first prepare a schedule of cost of goods manufactured in good form, and then second, prepare the cost of goods sold section on the company's income statement. So the first thing that I want to do is properly title the statement. So I'm going to put the company name, so I'll say Mason Company. Then I want to say what statement this is, and this is a schedule of cost of goods manufactured. And then you want to say what period it's for. So I'll just say for the year ended, and I don't know what period this is, so I'll just say question mark, question mark, question mark, question mark. Okay, so in the schedule, we're first going to reconcile the raw materials inventory account. So then we can figure out what raw materials we actually ended up using. So I'm going to title this direct materials, and I'll put the subheadings in first, and then I can start playing with the numbers. So I'll start with raw materials inventory beginning. Then we add our purchase of raw materials. Then we subtotal those two together, and that becomes raw materials available for use. And if I then subtract out my ending raw materials, I will end up with the raw materials that I used in production. And I'll just indent these guys here. Okay, so my raw materials beginning inventory is from this account here, so it's 18,000. And I add my purchase of raw materials. So the purchase is located right here, which is 180,000. And then if I add those two together, that comes to 198,000. Now I'm going to subtract out my raw materials for ending inventory. So what I normally like to do on statements, I like to put my minuses as subtractions and anything I add just as positive. It just makes putting the formula into Excel a little bit easier. So now I'll get this answer, and I'll just put it in its new column, because I just want the raw materials used in productions in this column on its own. Now, the next thing that goes into the cost of manufacturing a good is the direct labor. So labor doesn't have its own inventory account. So when you run payroll, what you can do is you can figure out what direct labor is for the goods that you're manufacturing, what indirect labor is for the goods that you're manufacturing, and then you can also do the labor for any of your period costs. So in this case, our direct labor is the 70,000. So I'll show you where to put the indirect labor. It just doesn't belong on this section yet. So we have direct materials, direct labor, and then we're going to do our manufacturing overhead. So these are all of the costs that are involved in producing the goods, but the reason that they're indirect is because they don't actually, I'd like to think about it like touch the product. So the materials used making a product that touch the product, it's materials. The labor that's used in a product, the person that was making it, they touch the product. So this is all of those other costs that are involved but not directly involved. So the laundry list is usually similar when you work on all of these questions. So I'm just going to go through all of these, and maybe what I'll do as well is I'll just put these in bold as I use them, because Once you use one of these numbers, you don't use it again. Okay, so I think I got most of the numbers that I've already used to this point. Okay, so I'm looking at this indirect labor. So that is part of manufacturing overhead. So the rest of these costs are either going to be manufacturing overhead, or when we put together our income statement, they'll be period costs, or they could actually be assets, so inventory accounts. So my indirect labor is the $45,000. My maintenance on the factory equipment, because it says factory, that's why I'm deciding that it's a manufacturing overhead. So remember, these are all of the costs involved in producing the good. So that's $6,000. Advertising expense, that's a period cost. It doesn't have anything to do with specifically making the product. That comes after the fact. Insurance, because it says it's for factory equipment, I'm going to include that. So let's see here. Insurance, factory equipment. Sales salaries, well, that's a period cost because it doesn't have anything to do with the factory, so I'll leave that for now. And then rent factory facilities, well, because it says it's for the factory, then I'm going to include that one. My supplies, it doesn't say it's factory supplies. And supplies is an asset account anyways, so I guess it could go either two ways. If I'm assuming that these supplies are used for the factory, I'll include it. If I'm assuming that this is just supplies, I could put it as an asset. Or if I think this is supplies expense used for my period costs, I'll categorize it on my income statement. But what we should really say here is supplies for, let's say supplies expense, factory. And that way there's no confusion of why I'm going to include it down here. So now we have depreciation office equipment. Well, because it doesn't say it's for the factory, I'll include that one as a period cost. And then depreciation factory equipment, I'll include that one because it says it's for the factory. So we just have to be really careful to look at the wording of all of this. So I'm going to include it as manufacturing overhead if it's specific for the manufacturing process. So it's an indirect manufacturing cost. The rest of those expenses, I'm assuming comes after my gross profit when I'm putting together my income statement, and then you'll list those with your office and general and administrative expenses. Okay, so I have my direct materials, I have my direct labor, and I'm going to add up these overhead costs. So I'll say total overhead costs. So that's just going to be the subtotal of these. So I just added all of those together. So when we look at this, we're going to take our materials used plus our direct labor plus our total manufacturing overhead, and that gives us our total manufacturing costs. So that's the manufacturing costs for the period. But what we have to watch out for is anything that you've already done in a previous period that's not finished. So I'm going to go into this next inventory account, which is work in process. So from the previous period, we would have our materials used, our direct labor, and our overhead costs. And we won't actually see those go through our income statement until we finish it and then we sell it. So this is where I will bring in this work in process inventory account. So I have work in process, beginning. So that's this number here, 10,300. Now if I take the beginning plus what I manufactured this period, I'll just take a subtotal of what I've done to date. And then if I subtract out my ending inventory, so I'll say deduct work in process ending. So that's the 15150. That will give me what I actually finished making, and then I transfer it into finished goods account until I sell it. So this is called my cost of goods manufactured. And we'll just put an end on there. And because I'm doing this in good form, I'll want to put dollar signs on the beginning of each column and then a dollar sign at the end of the report. So the second step that I need to do is the income statement. But in this case, I'm just focusing on preparing the costs of goods sold. So this is now involving the finished goods inventory account. So I've done making the product, I'm just waiting to sell it now. So like all of the inventory accounts we looked at before, this one works the same way. So if we just look at what's already in the finished goods inventory account at the beginning of the period, so this is everything that you've made to date, you're just waiting to sell it. So that is 18,100. And if I add in the cost of goods manufactured, so this is what I made this period, and I'm just waiting to sell it. And I'll just grab that number from the schedule above. And if we add those two together, that's how much product you have available to sell. So this is what we made, it's finished, and we can sell it. So we just call this goods available for sale. And if we subtract out anything that's still in the ending finished goods account, so that means that we haven't sold this product, then that will give us our cost of goods sold. So if we were going to take this one step further, meaning putting together an income statement, then what I would do is I would do my sales minus my cost of goods sold. That will give me my gross profit minus my period costs, and then that will give you your operating profit. And again, because we're doing this in good form, a dollar sign in each column at the beginning and the ending of the statement. And we're done.